Hey traders, welcome to a global macro update. We're going to be going over a few key news topics and then going to be jumping right into the technicals. First thing we're going to be looking at is Lebanon's financial crisis. So we are looking at where the money flows and if blockchain and cryptocurrencies are used in situations where bank failures occur. We see similar situations like Venezuela where they had the hyperinflation. People put money in cryptocurrencies to try to store their wealth. So let's look at this in a little bit greater detail. We see political turmoil and the pandemic-induced global market downturns have raised fears of government defaults and the devaluation of the Lebanese pound. As a result, more Lebanese people are seeking information about Bitcoin, which is relatively cheap and accessible compared to the fractured banking system. The exchange rate for Lebanese pounds and $2 has skyrocketed from 1,500 pounds for every dollar to 4,200 pounds for every dollar. So huge inflation here. Basically a hyperinflation. If you're looking at the exchange rate, you see similar things like Argentina basically cut their value of the currency in half. Dollars already inside. So we see it's not fungible, which is basically $1 that you have and $1 that I have is the same. And this is indicated right here. The exchange rate also varies depending on the type of dollar. Dollars already inside the restricted Lebanese banking system trade for less than physical dollars from the local black market, which are easier to move around. This is why some people are using Bitcoin to buy black market dollars to pay off their bank loans cheaply, said Bitcoin researcher Matt. So that's pretty crazy, and I think because we know for a fact that there's a lot of companies, corporations, countries that borrow in US dollars, and if we have a similar situation where there is less fungibility, the dollar inside the banking system is worth less than the dollar outside the banking system, they might use Bitcoin as a medium of exchange or some cryptocurrency. It might be a stable coin, we don't exactly know. It would make more sense if it was a stable coin due to the lack of volatility, obviously, but I think cryptocurrencies could be used in some sort of safe haven or median of exchange between, like we can see here, a fractured banking system and then having that dollar internally versus externally. Pretty interesting to see people flood into USD to try to resolve their issues to some way or another. All right. Now let's look at another news topic. Blockchain voting will determine Vladimir Putin's presidential fate. I thought this was pretty cool, so let's just dive in here. Russia's upcoming e-voting on the constitutional amendments will be implemented using blockchain technology. Blockchain makes voting almost impossible to hack. So as a blockchain network does not have a single server, the chain is almost impossible to hack, the official announcements say, and let's jump into this a little bit further. In the announcement, the Moscow government did not specify what kind of blockchain exactly is going to be deployed during the vote. The authority also did not mention any company assisting in implementing the technology for the voting process. But in my opinion, the fact that they're using blockchain I think is really cool, and the states obviously are talking about mail-in voting and trying new ways of creating a COVID-structured voting system, basically. And we can see that blockchain could be really helpful in this situation. So this is kind of unrelated, but I thought it was pretty crazy. The vote could extend Putin's term by another 12 years. Pretty crazy. First introduced in January 15, 2020, the constitutional amendments proposed aims to allow Putin to serve 2 more 6-year terms until 2036. If Russian people vote against the amendments, Putin will finally have to leave his presidential post in 2024. So he still has 4 more years here if it does go against him, but pretty interesting to see that they are using blockchain. And even CZ, the CEO of Binance, said President Putin is the most influential person in the blockchain space. Coming from CZ, that definitely means something in my personal belief. Quick look at the fear and greed index. It's pretty even at a neutral, and it's been here for a while. We dug out of a fear situation back in the 50% dump, and now we're just cruising in around 50, not really too fearful, not too greedy. We're kind of in the middle. Also, we do see the hash rate. This is the total hash rate for the BTC network. It is increasing, meaning there are more people starting to mine, and obviously with more people mining, it will increase the hash rate, which makes it more difficult to mine. But as long as Bitcoin's price is moving up steadily, we're not really going to see too much of a minor capitulation or really see any major sell-off that I was initially expecting back in, let's say, later half of March and April especially. All right, so we're now going to get into the price action of Bitcoin, and I did look at the similarities that we have compared to what we saw in previous time frames before, but we're going to go over it right now yet again. Let's just talk about where we currently are within the market. So we know we're in a major symmetrical triangle. Let's get our snip. And we have the candle closure poking out of our key level of resistance. We know that is bullish, but we still want to be really careful because there are wicks here. The sell pressure, I think, is definitely still present. I don't 100% say that this is 100% going to be a bull run. We do have to still be very careful because there's still sell pressure here. I am bullish on the short term, but in terms of if we'll break the high here, I do expect some level of a push, but going to be pretty careful. I don't want to just call it 100% we are in a massive bullish breakout yet because of the pretty big rejection. But in terms of the structure of the price action, I think it looks pretty similar to what we saw back in the summer of 2019. So this is that triangle that we saw in 2019 with that $1,400 price point hit right there back in June of 2019. And then we saw, in my opinion, something similar, and we'll look at the smaller time frames here, but let's just talk about the structure of the market because I do think that it's pretty similar. We had a descending trend line with 2 touch points, not extremely valid. We did have one more touch point there, making it 3 rejections, making it a valid zone, and then we had that ascending zone connect the higher lows, creating a squeeze within the structure. Still pretty wide within the squeeze, meaning that there's a decent amount of space here. You know, as the squeeze narrows, you do get tighter and tighter volatility and constriction. At some point, it does have to break out, but it's still pretty early in the triangle, and we're still pretty early on the triangle on the weekly chart. But I want to focus on this area right here because we do see the trend line was well respected, and then we saw a huge bullish push the price right above the key level of resistance right there. But soon after, a lot of people in the crypto market kind of call it a Bart Simpson, where the price just absolutely explodes to the upside. No real strong price action pattern. I would call it manipulation, and then you see like just this consolidating, noisy movement where you're not really making any higher highs or lower lows. You could, I guess, form some level of a base, but what you usually get is one last push to the upside. You leave a long wick. Candle closure is pretty bearish, usually a bearish engulfing candle, and then you get a massive sell-off back down. And that's what the Bart Simpson is called. Usually people in the cryptocurrency market know it because it does happen from time to time. And it happened right here. So let's now look at the smaller time frames because that's kind of similar to what we see now. We saw a key level of support hold the price. It shot to the upside, breaking resistance, surprised a lot of people. A lot of people turned bullish. We got a huge rejection back down, but we inevitably did hold that previous level of support. And then we rallied back up, did not touch that high, made a lower high, definitely something to note. And then we created our lower highs. We initially already had that horizontal level, which turned into a descending triangle. And then that previous support turned into a new level of resistance. So that's the larger time frame. Let's now jump into the 1 hour chart and see what happened. See this nice strong push, consolidation, and then a massive slam right back down, back below this resistance, which normally would have been turning into a new level of support. But in this circumstance, whales, I guess, did not really care, and they were just really putting that sell pressure on within the market. So in terms of the structure, with this push, pullback, really aggressive, I think it looks pretty similar to what we can see right now. So let's go to the 1 hour chart. It's a little bit longer, so let's just go to the 2 hour chart here. And this is that major zone, that around $9,700 zone that broke out to the upside, strong push, consolidation, and then a slam right back down. But we did hold that previous support that we initially held at around 93.80 to, let's say, 93.60. That's going to be the consolidation that I'd like to see hold, but then the bullish structure is created with this ascending zone, which is connecting the higher lows, and we do see lots of wicks to the downside, indicating that there's buy pressure picking up the price, pushing it back above, especially when we see that big bounce there, huge sell-off, and then an even greater bounce, indicating that the demand is still there, the confidence from the buyer is still there. And let's just look at the 1 hour time frame on BTC versus USDT. We see this previous level of resistance hold pretty well, multiple touches, and then we see a massive push to the upside, massive sell-off, bringing the price back below this key level of resistance. And then we started consolidating in here. I was a little bit worried because the fact that we went back down below this resistance was not a good thing. That should have been a new level of support in my eyes, especially because this resistance right here horizontally was in confluence with it as well. So we see this resistance hold the price multiple times, as well as a support here. It was a support turned into a new level of resistance here, and it was a resistance turned to support. I value that as a support, and then it turned into a resistance before selling off. And then we see it was at resistance 1, 2, 3. So that's going to be the horizontal zone that I'm identifying as a key structural area within the short-term price action here. So we put that right there. We have a nice ascending zone that we already talked about. Previous level of resistance, new level of support, new level of support. Big wick, new level of support all along here. A lot of bullish pressure, a lot of indications that there's buy pressure within the market. And then once we broke above this and held this zone, that in my opinion was a really bullish indication, because this previous resistance is now acting as a new level of support. So we now can identify that there are 3 major levels of support in confluence at this $9,700 zone, which is, in my opinion, going to be the main level of demand that I'd like to see the price hold. As long as it's holding there, we did make a lower high, but I think if we do potentially squeeze a little bit, we could gain that next push to the upside. We do have quite a bit of resistance, like I said before, around the 10K, 10.2, 10.4, around right around there. So we do have to keep that in mind. We do have to keep also in mind that this could occur where you get a push not as high as a previous one, and then you get a squeeze and consolidation like you can see right here. Let's just draw it in very quickly, and then you see a nice tightening of volatility, constricting, and then you see a massive sell-off, previous levels of support on the 4-hour chart with just a wick. You can clearly see that identifiable zone right there turning into a new level of resistance, and then you get your nice little bearish flag. You can call it a wedge, you can call it a ascending triangle, but some level of a squeeze from a horizontal zone and an ascending zone. You got to push to the downside, pull back, validating the previous support as a new level of resistance, and then you get a massive sell-off. So if you are looking for shorts, I think waiting for this confirmation is a good idea, and then you'd be looking for a retest of major levels of support. That, in my opinion, would be the best way to play it, because it does look bullish, and overall the momentum is obviously extremely to the upside. And yes, we could have a sell-off, but at this point in time, why fight the trend? I tried to fight the trend back in May, April, especially April, not so much May, but definitely April, because of the March sell-off. It looked like an ascending wedge about the sell-off. Made a couple attempts, did not work out. So at the end of the day, price action is representative of what the price will potentially do, more than just reading some article and just coming up with your own conclusion based off a whim, or how the weather is today, or whatever the case may be. You got to have valid reasons to think it's either going to go up or down. And technically speaking, in my opinion, I think it has a higher opportunity, or in a higher possibility of it going up in the short term compared to down, due to the technical factors of key levels of demand creating confluence where there is, in my opinion, the path of least resistance would be to the upside in the short term. Whereas if we do take a step back to the weekly, we do have to understand there are key levels of supply at around 10.4. We see key level of resistance. It was the spike top on that 40% move back in October of 2019, and it was also the high in February of 2020 as well, and then that was the high that we hit when we had that spike up recently. So this key level of around 10.450, let's say, is going to be our next level of supply, and then we also have a major level of around, let's say, 10.9 to 11K back in the structure of the triangle we talked about earlier in this video. So that's going to be the overall analysis for BTC. We're now going to go into the total too, looking at some of the, well, we're going to mainly look at the market cap for the altcoin market, and then we'll actually dive into one altcoin, ADA, or you can call it Cardano. A individual did request it to be looked at, so we will look at that after the altcoin market analysis. So that's my view on Bitcoin. We'll see how it goes. Let's just zoom out a little bit so we have a good view of the price action. I think I'm just going to skip. Perfect. All right, so I'm going to get a little bit of coffee and then we'll jump right into this. All right, so what is this chart? First off, how do you even find it? This is total 2, so you just type in total 2, and then this is the total cryptocurrency market cap excluding Bitcoin. We all know that Bitcoin, also actually before we get into it, I will put timestamps. We're going to look at Bitcoin dominance before we look at that chart because I do think that's important. I don't want to miss it. I might say that I'm going to do it later and I might not, so I'm going to do it right now, and then we'll get into the altcoin market cap because I do think that looking at BTC dominance is a really key thing. So it hasn't moved much from when we talked about it, but I still do want to touch on it because I think it's a very important key element to understand if we are in what we, I guess, would call a risk-on environment where speculators are putting money in altcoins because they have a higher potential for a greater gain, obviously, but they have more risk. It's kind of like if you're looking at the Russell 2000 in a bull market, it could potentially have a higher appreciation compared to more of the blue chip stocks because obviously if you have a smaller market cap, it has a higher growth potential compared to something that's more established, like you would look at Bitcoin. Ethereum is getting up there, but Ethereum does have higher potential in terms of appreciation than BTC, in my opinion. But in terms of BTC market cap, let's just keep at this chart. This key level of support is where we're wanting to see the price hold, or the ratio, I guess. This is the percentage, so it's currently at around 65%. I'd like to see it hold above this series of higher lows. We see a really well-respected zone right here, and this descending zone connect the lower highs. So right now we're getting a pretty good squeeze within the market. We can see that right here. And if Bitcoin does move to the downside, this chart is going to move up because when there's a huge sell-off, alts sell off harder than Bitcoin. If there's a bear market, people are going to be moving money or capital from altcoins to Bitcoin generally, if the general market is going down, because Bitcoin is able to hold its value at a much better rate compared to almost every single alt. Not every single alt, but a lot of them. And people know that, so they're going to move their money to BTC. But when you have these major bull markets like we saw in 2017, this is the start of 2017, this is the end of 2017. Look at how much Bitcoin lost in dominance. This is altcoins taking a huge market share of BTC. And I think when it inevitably does break this level of ascending support, we will have another altcoin bull market. I definitely think so. But until that moment occurs, I think we could slowly still grind up until we get the initiation of that huge, this is a bull market confirmation. And I think we're not there yet. That major rejection that we talked about at the 10K zone definitely gives a little bit of a worry in my opinion, but we're going to be looking at this as well as the total too, which we will talk about right now. So I just wanted to touch on that before we get into the price or the market cap of these alts. So we can see this is 2017 from around here. Let's just take a picture. Remember how BTC lost all that dominance? That's because the market cap of the alts went from, let's say, 450 million to over 270 billion. Insane, absolute insanity, but it happened. And now we're consolidating, making a much higher low compared to the previous one. And we can see this was that previous low. Nice squeeze, nice consolidation. You can even call it a horizontal one. And then you get these nice squeezes before you get the melt up. And then you get a huge, huge market move. Kind of like that. And then you get your top, and then you get your nice consolidation down. So then what do we see right now? I kind of see something like this. We're in the consolidation phase. I'm just seeing the market cap go sideways. So altcoins are not in the huge bull market that is making me want to put a large majority of a portfolio in alts compared to BTC because it has a higher appreciation potential. So that's going to be, I think, when it breaks this consolidation phase. So we see that there's a key level of both support and resistance. The support being, I guess, we'll look at that when we get off this snippet, and then we see that the resistance is around here. We'll look at the market caps, but if you look at the time frame on the weekly and look at it yourself, you'll be able to see it. It's as clear as day. It does look like a double bottom to some extent. If we can just take that off, this is our first bottom, and then this is our second bottom. If we do have this potential BTC breakout actually come into fruition, and if it actually does break and confirm our bullish trend, and if it hits that weekly chart point where the weekly candle is, this is that massive weekly chart for BTC, and then if we actually do break to the upside and hold and start gaining, I think alts will have an explosion in buy volume, because that, in my opinion, is a confirmation. Almost everyone is looking at that weekly chart of that descending trend line. And I think if we do see the momentum continue towards the upside, these alts could break this key zone that I see right here. So let's now take this off. The support being around 39 billion, the resistance being around 131 billion. And let's just identify those two zones right now horizontally. Oops. There we go. There we go, and then let's just put our descending zone like we can see right there. Make it red, just some live TA for people that are watching. Let's get our projection, because we like to have a zone, not an exact price point on the chart, and I'm pretty happy with that key level of support that we can see right here horizontally. Alright, so that's basically the structure that I currently see in the market, and the big question is, are we going to break to the upside and then have the double bottom confirmation, or are we going to come back down and then we go deeper into this not super descending triangle where it could take a long time depending on the market of BTC basically. But let's now dive into the 2-day just to see what we're able to identify. So we had not the best recovery, because I like to see some, like this is a really good structure because you have a nice ascending triangle right here. You don't really see any real basing here. You just see a big wick and then just a slow, or not really slow, but a climb that has no real structure. I guess if you zoom in real close, you could draw some ascending zone kind of like that, but I didn't really absolutely love it. But what did you get after that? You saw a consolidation where it was able to hold a low multiple times at around 75 billion, and now we've broken out of that consolidation to the upside. Going to be testing this key level of resistance. We'll see how it goes, but overall it does look bullish for the alts, but I'm not really going to be looking for a massive altcoin rally like we saw in 2017 until we break out of this zone. Yes, I do think that over time Ethereum and some of these smaller cap coins do have the potential to appreciate greater than BTC. Obviously, that makes sense. Kind of like in equities, if you're going to be picking smaller cap equities or market caps compared to large, you have a higher appreciation potential, but you have a higher risk there as well that you have to take in consideration. So we're not really going to dive in too much further. Daily and 12-hour don't really give us much more than what we already know on the 2-day, so we're just going to basically stick it with that. It's interesting to see that this is a very different chart than the 12-day because we don't see that wick on the 12-hour, sorry, but then on the daily you see a massive wick to the downside coming back, recovering all the way above the open. That's an extremely bullish candle, and then you see the price break above the previous resistance that was held very, very well, now acting as a new level of support. So in terms of the total too, it looks pretty bullish. You have to keep in mind that there's a resistance here, but overall crypto market does look really solid. Now we're going to look at the price action of Cardano. Also, for anyone watching, we are going to be going over some alts. So if you have a favorite alt, if you're looking to trade an alt, invest in one, whatever the case may be, I'm not going to go over the fundamentals of it, but I will go over the technicals paired with USD or USDT for whatever alt that you would like. So I'm going to get a little bit of coffee right now, and then let's jump into Cardano or ADA, and then we'll go into any other alt that kind of comes in the comments that you would like to see. All right, this is Cardano. Let's just take this off and go on the 1 hour. I was looking at it not too long ago, and there was a nice little squeeze. Let's just talk about it a little bit later. I was seeing if it would actually break out, but it did not, and I haven't looked at it since. Let's take that off because it was pretty bullish. Broke out of that zone very nicely. So we're going to take a step back and kind of delete it and clean it up here, and then we'll talk about what happened within that move to the upside. But let's first initially talk about where it was and where that move came from, technically speaking. Alright, so what's nice about Cardano in my eyes is in terms of the price action paired with USDT, it was able to hold a low. There was a big move to the downside, but if you're looking at the weekly or the monthly, this is just a wick with the candle closure closing right at this major zone where it held multiple times. So we've been able to hold a nice dependable floor for the structure. And then we also found that there was a previous support, resistance, support, support, resistance, turning into resistance very well here, and then another touch here, and then we saw that resistance here. And this was a very interesting structure that we found on ADA, where there was a very, very tight squeeze, contracting the volatility right into the funnel next to our major level of resistance. I was surprised it broke to the upside, but it managed to crack and break up, and then once you started to see the momentum, I think there was some FOMO buying or something, but look how much volume came into the market compared to the entire year from 2018. This has been the highest amount of transactions that have taken place on this chart, we can see. So that tells you something, that tells you the amount of interest there is on Cardano. So let's now go into a smaller time frame, discussing what happened. Before we dive in, we do have a key level of resistance at around 0.1. It's a major psychological zone because it's a pretty round number, and then the next major zone definitely seems to be around 0.15. We can see it was a previous resistance turning into support, turning into resistance support multiple times. So that's going to be a next major zone. We got a lot of space before that zone does look like it's going to get hit. I think we're going to have quite a bit of an interaction around the 0.1 range, but let's now discuss the smaller time frames because we do very, very clearly see that this is a major level, and also we can identify that this is the completion of the potential double bottom, where this is the breakout zone for the double bottom, previous major level of resistance turning into our breakout area where this is a key level of resistance, and then we see this nice bottoming structure right here. And if we're able to break past this major level of resistance, that would mean that it's extremely bullish because we've completed the double bottom. Take the structure length, you're looking at like something here. So that's a massive move. If the double bottom does complete, you just be looking at that height basically. I guess you should do it in a straight line, not an angle. That's the breakout zone. And that would be your potential target right there. Just if you're looking at your geometry, and then if you're looking at from the breakout zone to this next major zone, it's like 64%. So that's the bullish case. if it does break out above this major 0.1 area, you'd be looking for some level of a retest, or at least I would, and then that would be when I would be looking for possible entry, but I think it's got a little bit of ways to go before that occurs. So what we can see right now is after the major breakout, we got a very nice squeeze here, whereas contracting, explosion and volatility, and then you see the first setup of the move. This is on the 2-hour chart. You get a nice descending zone. What's a little bit frustrating is you get this big wick to the upside, but in general, you do get a squeeze. You can see that right here. So you get a nice squeeze, and I was looking for continuation because I was holding a previous level of resistance as a new level of support, like so. And that's some pretty nice TA right there. And then we just get our next squeeze, previous resistance turning into a new level of support, and then you could even just go like that. And that's going to be the contraction that we're looking for before the expansion phase within the next impulse push. If we do get one, we are going to be looking for BTC, obviously, to make a move, because altcoins generally don't move a lot unless Bitcoin starts to be bullish. All right, so that's going to be the potential on the 1-hour chart. It's a little bit noisy, a little bit messy, but that's basically what I see on Cardano. Looks pretty bullish. This is a continuation pattern. As long as it's holding above this nice level of support, that looks pretty good. We do have an ascending zone that we can extend out further. That's going to be a potential level of a support yet again. So that's going to be kind of the final zone that we are looking at for a potential level of support, sort of like here. And let's just draw this zone yet again. And that's just going to be a white zone because I'm looking at it less than this major zone right here. This is the key zone that I want to see the price hold, around 0.084. And then if you're really looking for a potential trade, you're looking for a push pullback. So let's say we are getting a nice little brush, comes a little bit further, pulls back, kind of like that. That's ideally what you're looking for, and you're looking for that retest validating that previous resistance as a new level of support in confluence with this horizontal zone, which is now a support as well. And you'd be setting your stop loss below the previous low. You'd be looking for that initial crack, like kind of like here. Obviously you're looking for a crack, and you're looking for that pullback with a wick that's going to validate that there's more buyers than sellers, pushing the price back up, seeing that initial buy volume significantly greater than the pullback sell volume coming in, which is just your market breadth for the next impulse push. So you could be looking at something like that, and then if you're looking for any take profits, go like that, extend it there. 2.3 for your first one, depending on your risk, and then if you really want to go for the overperformance, you could be looking at this next sell supply zone right around there. So that's kind of how I would view this overall market. That's how I would play it. I'd be looking for contraction and then an expansion calculated by TradingView. I think if we try to go like this, it might be a cleaner chart. Yeah, I think this is a cleaner chart. So let's just look at the structure in another way. But if you have any other questions, definitely put them down. But I will just be redoing that very, very quickly, just so I have the same chart. Oops, where am I? This one right here. And then that's going to be the supply zone. So I'm going to quickly draw the rectangular area, like so, in red. And then just draw my nice little descending zone right around here. All right, and then you got a nice little squeeze there, and then you got the bullish push. Just wanted to indicate where that was, and then we're going to stick with the 1 hour for the most of it. And then we're just going to draw our zones yet again, just because we like to understand what happened kind of leading up to where we're going to trade, because it kind of gives us the flow of the market, what happened recently, what could happen in the future, if there's any fractal patterns where you're going to get smaller patterns within larger patterns. That does tend to happen. And if you're able to kind of keep your structures within the chart, you could be able to remember that fractal and then trade based off of what happened last time to some level of degree. All right, so that's going to be the same thing. And then I think you could also kind of put that there, but that's a little bit wonky. I'm not going to do that. And then you got to put your nice descending zone right here. And then your, let's put our projection there as well. And that's basically all we're going to go over in terms of altcoins. I will be answering any questions for now, if you do have any questions, or if you have another alt that you'd like to look at together, or just if you're interested in an alt, we can do a relative strength test. And I think I will end it off looking at ADA on the relative strength compared to BTC, because we do have that already in place. All right, so that's kind of what I see in the market. Nice slow consolidation, sloping downwards, contracting in volatility before potential next move towards the upside. And this usually has some level right in the middle, somewhere right like that. All right, so that's going to be the move for the potential. And then now we're going to look at some relative strength within Cardano, because why not? So this is our chart with all the relative strength on it. And then all the way at the bottom is Cardano. But we do see things like XRP. This white one is XRP. We can see that it's below a key structural level of support, indicating that it's weakening. We see it's melting down, making significantly lower highs, and once it broke this level of support, confidence is lost. It does not look like it's great for XRP overall. We see some other coins like Link do extremely well against BTC. This is red, that's Link right there, and then this blue one's EOS, and that's depreciating against Bitcoin. But this is Cardano, and Bitcoin is going to be basically the index that you want to beat if you are looking at altcoins. The only kind of reason to put money in altcoins is you think it's going to appreciate better than Bitcoin. If you just want to put money in crypto in a safe way for a long hold, I'd say Ethereum or BTC is by far your best bet. In my personal belief, not financial advice, but that's just what I think would be a better situation. So in terms of what we see recently on Cardano or ADA, we see that there was a double bottom which held a very strong level of support, and then we got a completion of the break, breaking above the neckline, what you call a double bottom neckline right here. And then once that happened, there was no pullback, no hesitation. It was an instant move to the upside. Huge price appreciations in Cardano, but this next level is going to be coming up here, so we do have to keep that in mind, which is right around here. You could extend it so we're capturing the bottom, but I'm going to just put it like so. You could kind of put it like there as well. I think that's where I'm going to put it, somewhere around like that. So our next support zone is pretty close, and we already did complete this structural double bottom move to the upside. So I would expect ADA to take some level of a market breath. But it could continue onwards, obviously. It does look pretty strong in terms of the relative strength, how much it's appreciating compared to BTC. And as long as Bitcoin looks pretty strong, I think that Cardano can continue up here. And this is the daily chart we have to remember. In terms of where it could go from the current representative data of how many Bitcoin it takes to buy one Cardano, it could go up significantly, which means on our 1 hour time frame could easily move up to our next key level of resistance. It seems like a lot, 17% or whatever, but we can just look at a different way to view your take profits. That could be your first one right there, just in terms of where this triangle is breaking out of. And you could look at it like that as well, where it break out of. Let's just call it in the middle right there. And then you can also look at this zone here to, let's say here. Obviously that's not a great take profit, but I'd mainly stick to this one right here. That's not so bad. But we'll see where it goes. That's a pretty decent entry if you're entering kind of at the lows here at the retest. 9%. If you're risking 3%, that's a pretty damn good risk reward in my view. So we'll see where it goes. It's pulling back a little bit, but it could definitely still move up. So overall, I'm still bullish on Cardano, technically speaking. So I don't really see much else in terms of the questions. I'm going to leave it there. Hopefully you enjoyed it. Talked about a decent amount of stuff today. Overall, BTC does look bullish in the short term, although we do have to be careful of a potential slap right back down, kind of a punch in the face like we had right here for the bulls, but I think that could happen. Like we said, we do have to keep that in mind where you get not as high of a high. You know, if you are looking at the retracement, it's right at around the 786, and then we can see that the 786 would still be a decent amount of ways here in terms of where we could go, and it would be in confluence with a pretty key level in the chart. So we'll see where it goes, but that's my current view of the market. Thank you very much for watching. If you found it useful, informational, educational, it would be great if you subscribe to our channel and like the video so you can get more trading videos like this. So if you want a second opinion, learn about TA, just the basics. We're not here to, you know, throw a million things to try to analyze a chart. We're pretty simple in terms of key levels of support, resistance, trend lines, using retests, simple price action patterns as well as candlestick patterns is basically what we're all about. And trying to find the constriction and volatility before the expansion, the entrance on the completion of the exhaustion phase, not the completion of the impulse. That's not what you're wanting to see. So thank you very much for watching, everyone. Hopefully you have a good weekend. It is Friday, and I will definitely have a good weekend. So hopefully you will too. So thank you very much for watching, and until next time, have a good one, everyone.